I'm Emma Dent and welcome back to the Video Weekly Diary series. We'll kick things off with our notable events of the week. Over the past week, the New Zealand government introduced strict precautions in order to combat the spread of coronavirus. These include imposing strict self-isolation criteria, and they have also effectively closed the border to foreign nationals. On Monday, the RBNZ announced the OCR is now 0.25%, reduced from 1%, and will remain at this level for at least the next 12 months. On Tuesday, the government unveiled a $12.1 billion package to support New Zealanders through the impacts of COVID-19. Tuesday's package is only the start of an unprecedented policy response that will unfold over the coming year. On Friday, Air New Zealand announced that it had entered into a debt funding agreement with the New Zealand government. Under the terms of the agreement, the government will provide a standby loan facility of up to $900 million to support the airline as it manages the impact of COVID-19 on its business. Air New Zealand came out of a 5-day trading halt on Friday morning and fell 35% over the day, closing at 99 cents. Moving on to our weekly recap, the total value traded on Friday was $577 million, with an extended adjust session to accommodate the last trading day before the quarterly FTSE Russell rebalance. The total value traded for the week was $1.8 billion, with 64% of that value traded on market and a trade count of 290,000. The S&P NZX 50 fell 6%, closing the week at 9,201. In global markets, the S&P 500 fell 14.9% and the ASX 200 fell 13%. Further information on the weekly recap, including the value and volume of the NZX top 10 securities, can be found in the weekly diary. Moving on to our guidance updates. Due to the unprecedented nature of COVID-19, a number of NZX issuers have withdrawn their earnings guidance. These include Air New Zealand, Auckland Airport, Tourism Holdings, Serco Limited, Vista Group Limited, Gentrack Group and Millennium Copthorne. In response to the ongoing pandemic, NZX announced on Thursday immediate support measures for New Zealand issuers designed to address the impacts of the virus. NZX announced a lift in equity capital raising capacity to help listed issuers weather the COVID-19 virus, along with measures to allow greater flexibility in the timeframes for financial reporting. Check out the links below for more information. And finally, our week ahead. On Saturday, New Zealand Prime Minister Jacinda Ardern unveiled the coronavirus threat level system that is being used to manage the threat of coronavirus. It is similar to the current fire or terror threat system, and as the threat level rises, increasingly severe measures are rolled out to combat the spread. After initially being at level 2, New Zealand is now at level 3 and will be moving to level 4 by midnight on Wednesday. At alert level 4, New Zealand will effectively go into lockdown with schools and businesses closed except for essential services. The capital markets are an essential service, and as such the NZX will continue to operate according to our standard operating timeframes. More information on the government's response to COVID-19 can be found in the links below. Last week, the RBNZ also announced the Monetary Policy Committee had decided to implement a large-scale asset purchase program of New Zealand government bonds. The program will purchase up to 30 billion of New Zealand government bonds across a range of maturities in the secondary market over the next 12 months. The program aims to provide further support to the economy, build confidence, and keep interest rates on government bonds low. And finally, keep an eye out on Friday's announcements as Hallenstein Glassons Holding Limited are scheduled to release their half-year results. Thank you for watching the Weekly Diary. Don't forget to check out the links below for more information, and we will see you again next week.